What's going on today, YouTube? Today, I want to tell you the top 5 reasons why traders lose money. Now, I'm going to use some examples along the way, but the number one reason is they buy high and sell low. This is the most common mistake every new trader makes. And for example, we'll look at this stock, JDST. We're going to look at the 180-day. We'll go to 6-month, 1-day chart. Okay, what I mean by they buy high and sell low. They go in, this is over the period of the last 180 days. They go in, they see this stock is going up and up and up. And guess what? They buy up here. And then it starts falling, they panic, and they sell. Now, first of all, you never want to buy when a stock is on, like, it's this high. When it's good 40 and it goes up to 80, that's doubling. You don't want to buy there. And even down here, this is an RSI indicator, strength indicator. That's what this is. When it's below 30, that means the stock is oversold. And when it's above 70, that means the stock is overbought. It's a good indicator to tell you where the stock is. And as you can see down here was your buy point. And honestly, you should probably be selling in here. Stock goes up that much that quick. You figure, guys, that is a 50%, 60% increase. That's when you need to get out. Never buy high up here and sell down in here. And over time, every single stock, they fluctuate. We'll go to a year quickly. Like they go up and down and up and down and up and down. When you're buying up here near it's like highs of that year, it's bad. You need to buy on the lows. Look at the past history of the stocks. Buy at the low points. Right in here, 40 is the low, and right now it's at 47, just for this stock, for this example. Number 2, the second biggest mistake. They don't have a clear plan. When you go into a stock, you should always have a plan. For instance, if you're looking at, say, you want to trade JDST, you want to go for a little potential profit. Down here, I would wait until you get solid movement above this indicator. This is just a standard EMA line. If you turn it on, you can turn it on. This standard, when it starts going above, that means it's positive momentum. You guys can see when it's below this EMA line, it goes on a downtrend. It bounces off and goes lower and lower. When it crosses above, it bounces off and keeps going up. You want to wait for that confirmation that the stock is going up. So you don't want to try to guess the bottom. Never guess the bottom. You'll be way more profitable and way better off if you start buying when you see like an increase. If I'm trying to guess that, like the whole time this stock's fallen, if I'm trying to guess the bottom, I could have guessed here was the bottom, I would have been wrong. Could have guessed here was the bottom, I would have been wrong. Here's the bottom. So you want to buy once it is already trending up. You don't want to buy when it's trending down and try to guess this bottom. So for instance, right now, looking at the stock, say I wanted to trade this for a little potential profit. If I wait until it is on a solid uptrend, like right here, it was a fake out. And you could have bought here and sold and you could have made a profit, but once this line also starts flattening out, it's a good sign it's going to change. It's going to reverse. As you can see here, like it goes up and then it starts flattening and then so when you see this EMA line start to flatten, that's a good indicator it's time to get out because the trend's probably going to switch. But you want to have a clear plan when you go in. Since right now I'm still waiting on this stock to have a solid like uptrend. When I see, like as in back here, when I see it is on a solid uptrend, that is when I want to buy. So you want to wait for a solid uptrend, like back in here, and always have a plan. Know when you're going in, know when you want to go out, and so forth. So here, if I'm looking at this stock right now, I want to know where I see a potential for profit. Here, I kind of see a resistance line. So, say I draw a line here. I'm going to zoom in a little bit. Right now, I want it to break that $50 line before I even get into this stock, because if I buy here and I'm seeing that resistance, that's only room for a 3% profit. I'm looking for trades that are more than that. So, if I wait here, my next resistance line I see is up in here, just because of this two bottoms it had. So if I wait till it gets that $50 mark and then try to make the trade, that's a 17% profit. Where since it broke this line, if it breaks this resistance line and it holds above it, that will be my new support line. So if I get in here, I know, say I wait till $51. We'll go around 51. That's a potential for a 14% gain, and based on my losses, that's a 2% loss. 15% gain, 2% loss. That's a trade that's worth it to me. Have a plan. And this goes into the third point I want to make. Traders that are not profitable make their losses larger than their gains. So when you're going in, this is all based on you. It's based on what you see risk reward. So if you want to always make your losses smaller than your gains if you want to be a successful trader. So go in anytime you enter into a stock. If it goes down 2% from your entry, or 5%, or whatever your risk, whatever you want to cut your losses at, but make a point and make sure you get out. Stick to that plan. Don't just hold and hope. If you make your losses smaller than your gains, over time, you will make money. That's all there is to it. Losses small, and if the stock stops doing what you think it's going to do, get out. It's not worth it. It's not worth it to hold and hope. Never hold and hope. And hold and hope, that is my fourth point. If the stock does not do what you got in expecting it to do, get out. So don't hold and hope. A $50 loss is a lot better than $100 lost. Like hundreds of dollars, not just $100, hundreds of dollars. Say you got in, you're holding and hoping. We'll use this example. Say you got in here. It goes up to here, and you're just going to hold and hope because you think it's going to go up to here. If you hold and hope and you got in here and you're still in today, I mean, yeah, that's a 10% loss. You don't want that. You want to minimize your losses, guys. Hold your losses to about 2% and go in with X where you think you can make more money. Like, I think this $50 mark on this stock is a great little trade. I'm going for a 17% profit, and that line should hold as a support line once it crosses. So never just hold and hope. And the last point I want to get to is look at your always calculate your risk for your reward. I know I touched on that a little bit ago, but you have to see if there's no reward for what you're risking, what's the point of getting in? And don't ever think like you're going to miss out, because these opportunities happen all the time. You're not missing out. You're just learning. You look back, say you mess up. Say you got in at the wrong time. Learn from it. Look back, see what you did wrong. Don't just give up, and always try to make it better. And the last thing I wanted to say, if you're going to be a successful trader, you must have discipline. Have your rules, follow them. Act like a machine. At 2%, you're out every single time. 2% loss, you're out every single time. If you do that every single time, you're going to minimize your losses, and you're going to be ready for these great 17, 18% gains. I just want to say, for example, quick little easy example. Say you saw the stock was going up, and you think it's going to keep on going up, so you bought in here. Before you ever buy, look into it real quick. Like in here, it's not worth it, because that's its new resistance line. So you're looking at a potential 6% gain, and that support line, that's a 9% loss. So your risk reward right there, it's not worth it. A 6% potential for a 6% gain is not good for your loss of around 9%. That's what I mean by risk reward. Like when I go in, I want something Like that $50 mark. When it crosses here, I want to wait until it crosses, just because my risk, cut my losses, say at 2% again, but I'm going a 2% loss for a 17% gain. That is a great risk reward. These are the trades you need to look for. So if you like this video and this kind of content, give the video a like, comment below, subscribe to my channel, and I'm going to keep on giving you guys tips to be more successful in the stock market.